Poštovane dame I gospodo,
Ladies and gentlemen, dear colleagues, we are here today to present the inflation report to you, but that's not the only thing. I wanted to leave it to my colleagues, to Ana's associates, Branko Hinić, Mirjana Miletić, our Milan Trajković, and Mirko Đukić, and our newly elected General Manager of the Monetary Operations Department, Nikola Dragašević, to present the inflation report to you, because essentially these are our associates who are mostly engaged on the results that we are about to present today. I'm not easy to persuade, but they did persuade me to be here today, to lead the conference, because of reasons maybe some have forgotten. Some are eager to observe it, and this is the occasion is my 5th year as governor of the National Bank of Serbia. Being here means committed and devoted work with my team that you see with us here today, with the large number of people who not all can sit at this table today, but hopefully they will have an occasion to do that. A number of devoted colleagues and co-workers, owing to whom we have achieved the results we can present to you today. So please don't take it against me. I had to say this because of all the results we have achieved, and I would like us to recall our results over the past 5 years. You are aware that there were strong challenges from the international environment which heightened uncertainties in all markets and did not work in our favor, but it also did not prevent us from achieving and maintaining price and financial stability in the 5 years behind us. I would like to use this opportunity to highlight some of our key achievements, as well as remind all of us of the significance of these results. Inflation has been low, stable, and predictable for 4 years in a row. In autumn 2012, inflation equaled nearly 13%, and in less than a year we managed to bring it down to 2.2%. After that, we have kept it at a low level. Low inflationary pressures from 2013 onwards were partly attributable to low cost-push pressures from the international environment. However, they are mostly a result of the effects of domestic factors: relative stability of the exchange rate, more anchored inflation expectations, and the effects of fiscal consolidation. With the price stability it has achieved, Serbia is now comparable to other European countries. And since the start of the year, inflation has moved within the new lower target tolerance band and measured 3.2% year-on-year in July. Core inflation moved at around 2% during the year and equaled 1.7% year-on-year in July. This is also a confirmation of the adequacy of the monetary policy that we conducted in the prior period, as well as of the legitimacy of our decision to lower the inflation target from 4 to 3 ± 1.5%. According to our latest projection, we expect inflation to remain within the new lower target tolerance band for the following 2 years as well. Over the past 4 years, interest rates on corporate, household, and government borrowing have decreased considerably. This is reflected in higher disposable income, a rise in lending and economic activity, and more successful fiscal consolidation. Inflation was first lowered and then maintained at a low level, thereby enabling significant monetary policy easing through the key policy rate, which we initiated in May 2013. By July 2016, the key policy rate was lowered by a total of 7.75 percentage points to 4% through a total of 17 iterations. Owing to this, interest rates on new dinar loans to corporates and households were lowered during the past 4 years by more than 10 percentage points. Within 4 years, interest rates on euro-indexed loans were also decreased by 3.5 percentage points for corporates and 3.8 percentage points for households. The decline was indeed partly a result of lower interest rates in the euro money market and partly attributable to the country's lower risk premium and interbank competition. Our efforts to create a more stable business environment, as well as the significant fall in the country's risk premium and Serbia's improved credit rating, were the dominant factors leading to the lower of interest rates on euro-index loans and the greater availability of cross-border borrowing at lower costs. The fall in interest rates on private sector borrowing provided an impetus to the rise in disposable income on account of lower interest rates on current and new loans, with the possibility of refinancing under more favorable terms. Fiscal policy was also immensely helpful in preserving price and financial stability. However, it caused some feedback effect as well. As monetary policy eased, interest rates on dinar government bonds were lowered by more than 7 percentage points, depending on maturity. This significantly lowered the costs of dinar government borrowing, which, together with a more favorable economic ambience and in condition of low inflation and a relatively stable exchange rate of the dinar to the euro, rendered fiscal consolidation more successful. Lower interest rates meant lower costs for everyone: the corporate sector, citizens, and the government. Significantly lower interest rates accelerated economic activity and labor market recovery led to a rise in loan demand. On this account, lending recorded since the second half of 2015, lending recorded positive year-on-year growth rates despite the maturing of considerable amounts of subsidized loans and increased efforts of banks to resolve the issue of non-performing loans. Since the start of 2015, new investment loans were approved at a significantly faster pace, the total volume over the past 2 years equaling the level of total new investment loans in the 4 years before that. Investment loans were one of the sources of funding investments in the new investment cycle, thereby contributing to a pickup in economic growth. During 2017, the year-on-year rise in loans accelerated and arrived at 4.5% in June, or 6.7%, excluding the effect of NPL write-offs. In the prior period, financial stability has been preserved, the share of NPLs in total loans dropped significantly, and the regulatory framework has been improved. Owing to the appropriate combination of measures of monetary and fiscal policies, Serbia arrived at a more favorable macroeconomic position, which, coupled with the MBS's regulatory policy, also contributed to the stability of the financial system. In one word, our system is now more stable than before. One of the key results in this area is the resolution of NPLs, an issue that accompanied Serbia into the financial crisis, after which it only deepened further. To resolve the NPL issue in a systemic way, in cooperation with the government, the MBS prepared the NPL resolution strategy and accompanying action plans and adopted them in August 2015. The MBS carried out all the activities within the deadline set by its action plan, and as a result, since the adoption of the strategy, which means within a period of less than 2 years, the NPL share has decreased by close to 7 percentage points. Moreover, corporate NPLs are now at the lowest level in 9 years. As a result of numerous measures and activities that were undertaken in the area of macro and micro-prudential policy, the Serbian banking sector features a high degree of capitalization and liquidity, which are above the regulatory requirements, and resilience to various macroeconomic shocks. High capital adequacy has been confirmed by special diagnostic studies of the quality of banks' assets, which until then had never been conducted in the domestic banking system. The stability of the sector is further substantiated by the fact that banks operating in Serbia mostly rely on domestic sources of funding, which increased in the previous period. This reduces banks' exposure to risks stemming from the international environment, as well as to the risk of sudden withdrawal of funds by the parent bank, which was one of the challenges countries in the region faced during the crisis. Additional contribution to the sector's stability came from our strategic commitment to continuously improve the legal framework in accordance with international standards and EU regulations, taking into account the specificities of the domestic market. Let me remind you that we have composed and adopted a set of secondary legislation introducing Basel III in Serbia as one of the important reforms aligning Serbia's regulatory framework in this area almost entirely with the applicable framework in EU countries. Since August 2012, we have ensured the relative stability of the exchange rate, which is one of the factors of overall stability. The international environment in the prior period was marked by uncertainty arising from the diverging monetary policies of leading central banks, but also from the so-called Greek crisis, the Asian stock market crisis, shifting outlooks for global and Chinese growth, the effects of Brexit, geopolitical tensions, etc. To these challenges, we responded adequately, owing to greater resilience of the Serbian economy and the financial system, cautious monetary policy, as well as interventions in the foreign exchange market, which were timely, fine-tuned, and well-balanced in terms of the reaction to short-term pressures towards both the depreciation and appreciation of the dinar. Expressed in numbers, in the last 5 years, until July, the MBS intervened in the foreign exchange market by net selling 765 million euros, with the nominal depreciation of the dinar against the euro of 1.5%. This is significantly less than the net sale of 5.7 billion euros in the 5 years before that, when the nominal depreciation of the dinar, all the while, was 33.2%. Bracing for the coming pressures by preparing a defense system at peaceful times and investing in stability during turmoil, the country's gross foreign exchange reserves were preserved at an adequate level, measured by all criteria, while in net terms, they increased from 6.6 billion euros at end 2012 to 8.4 billion euros at end 2016. Confidence in the dinar is also returning slowly, as evidenced by the rising degree of dinarization. Macroeconomic stabilization, significantly lower dinar loan rates, and measures promoting saving and borrowing in dinars provided a contribution to the increase in the degree of dinarization. Consequently, the share of dinar loans of households rose from 35% at end 2012 to almost 50% where it now stands, while at the same time the share of dinar deposits in total deposits also rose from less than 20% to around 30%. As of last year, banks introduced dinar housing loans, approved at interest rates below 5% and for a period of up to 30 years. Last year, the top-rated international financial organization issued the first dinar securities and used the proceeds obtained in this manner for dinar lending. Bearing in mind how deep the roots of Eurozation go, we are aware that dinarization will be a gradual process, but the important thing is that it has begun and that it will remain one of our strategic priorities. The business and investment ambience is now more stable. Over the past 5 years, the MBS managed to achieve and maintain price and financial stability, thereby meeting its statutory objectives and contributing to the creation of a more encouraging business environment, a fall in the risk premium to its lowest level, and improvement in the country's credit rating, progress on the doing business list, and prospects for the coming period. The practical importance of this is substantiated by the inflow of foreign direct investment, which measured 5.5% of GDP in each of the past 2 years and was more than sufficient to cover the current account deficit. Moreover, better business results supported by lower costs of corporate borrowing and relative stability of the dinar provided the funds that pushed investment growth up. Owing to this, private investment, direct-led mainly to export projects, has become one of the pillars of economic growth, and we expect it to remain so in the coming years. Ladies and gentlemen, dear colleagues, I would like to reiterate that these are only some of the key results we have achieved over the past 5 years. I must point out that this is a pleasant, though rare, opportunity to look back into the past in order to learn lessons for the future which we create together by overcoming all challenges, but armed with knowledge and a sense of responsibility about the importance of what we do. In the period ahead, you may count on the National Bank of Serbia to use all of its available instruments to maintain the achieved price and financial stability and give its contribution to economic growth and the preservation of the standard of living, which first and foremost is our main objective. Before I pass the floor to my colleagues, primarily to Ana Ivkovic, Director of the Directorate for Economic Research and Statistics, I would like to share with you delightful news from this morning. Since yesterday, JP Morgan has introduced dinar bonds in the list of its tradable securities, thereby recommending it to its investors. And on the 11th August this year, they purchased our dinar securities this year for the first time as well. I think this best speaks as to how good the results are of everything we have done for the past 5 years, and I hope citizens will feel this every day in their everyday life as well.
I would like to thank Madam Governor primarily for the past 5 years. I'd like to thank her for the results that we have achieved, and I wish we will have many such years to come. Ladies and gentlemen, esteemed members of the press, dear colleagues, welcome to the presentation of the August Inflation Report. After the Governor gave an overview of the work of the National Bank of Serbia and the results achieved in favour of citizens and the economy over the past 5 years, in the following 15 minutes we shall focus on the current economic developments and our latest macroeconomic projections. Since the start of the year, inflation has moved within the new lower target tolerance band of 3 plus minus 1.5%. The fall in year-on-year inflation over the past several months to 3.2% in July is confirmed, and we have seen that since early 2017, inflation was driven by higher prices of a small number of products and services, and inflationary pressures are still low. Consumer price growth reached 0.5% in the second quarter, and this growth was slower than we expected in May. Along with falling imported inflation, this is one of the reasons why we revised downward the new inflation projection compared to the projection that we presented to you in May, both for this and next year.
As I said, the new inflation projection is lower compared to May. At the same time, economic activity is expected to accelerate in the coming period, aided mainly by the acceleration of growth in the euro area and our other important trade partners, continued recovery of domestic demand, the diversified inflow of foreign direct investment, and further improvement in the business and investment environment. Commodity experts continued to post high year-on-year growth since early 2017, while the rise in imports was largely due to greater needs of industry for equipment and intermediate goods. In the remainder of the year, we expect exports to step up and imports to slow down, which was evident in June as well, which is why we kept our projection of the current account deficit at around 4% of GDP this year. The deficit will remain fully covered by the net inflow of foreign direct investment, whose 2017 projection was revised to 1.7 billion euros, as the realization so far has been higher than expected, exceeding by over 12, that is by 12.2% higher than the inflow recorded in the same period last year. Positive trends continued, and we recorded a general government surplus of 2.1% of GDP in the first half of the year, fueled mainly by rising fiscal revenue. Excluding interest expenses, the surplus equaled 5.7% of GDP. Central government public debt, whose upward trajectory was reversed last year owing to fiscal efforts, continued to contract this year as well. Developments in the international environment, as Madam Governor highlighted, we have to point out the turbulences last year. Over the past months, we saw improved outlook for global growth, notably in the euro area. The ECB revised upward its projection for euro area growth, and in June it presented this revised projection, and the ECB also expects that growth will be broad-based, both sector-wise and geographically. The consensus forecast and the IMF also revised upward the projections to 1.9% for this year. As for the next year, this growth equals 1.7%. Expected faster euro area growth had a positive effect on the outlook in the surrounding countries, which are also our important trade partners. Despite the acceleration of economic growth, inflationary pressures in most countries remain weak, mainly on account of the repeated drop in global oil prices, and in the second quarter, global oil prices oscillated between 44 and 55 US dollars per barrel, underperforming the March figure by 8.5% at end June, and oil prices were determined by supply-side factors. In July, global oil prices edged higher, but not above $52 per barrel. And July oil futures, which we use in the projection, indicate that oil prices will touch $53 per barrel and will not change significantly until the end of the next year. On the other hand, growth in global primary agricultural commodity prices, which began in the first quarter, continued into the second quarter. In line with low inflationary pressures, interest rates of most central banks are still at their lowest. In addition, some central banks continue to apply unconventional monetary policy instruments, notably the ECB. On the other hand, the Fed raised again its federal funds rate in June and announced this is the third increase in the Fed's rate since December 2016, and the Fed announced that it would start to normalize its balance sheet until the end of the year, on condition that circumstances in the economy are in line with expectations. And the Fed will be reducing its reinvestment of repayments of principal on securities purchased in the quantitative easing program. The divergence of monetary policies of leading central banks is creating more uncertainty surrounding global capital flows to emerging economies, Serbia included. However, the better outlook for global economic growth raised investor sentiment in the international financial market, which positively reflected on movements in the domestic FX market, where appreciation prevailed in the second quarter and continued into July and August as well. In general, appreciation pressures in the said period were due to better export performance of our economy, a high inflow of FDI, the return of foreign investors to the government dinar securities market, the seasonal increase in inflows of remittances, and growth in FX-indexed bank assets. Relative stability in the FX market has for quite some time been supported by improvement in macroeconomic fundamentals, which resulted in the decline in the country risk premium in August to the lowest level on record. To ease excessive short-term strengthening of the dinar against the euro, the NBS intervened in the FX market by buying 505 million euros in the second quarter, 165 million euros in July, and 145 million in the first half of August. The decline in the country risk premium and interbank competition helped further reduce the private sector's cost of borrowing. The average interest rate on new dinar loans to corporates and households was cut by 0.9 percentage points in the second quarter to 8.5% in June, while the rate on new euro-indexed loans lost 0.2 percentage points, coming at 3.1%. Lower costs of borrowing and recovery of the economy and labour market boosted credit activity. In June, it accelerated to 4.5% year-on-year, and excluding the effect of NPL write-offs to 6.7%. Additional qualitative progress in the credit market was made in the segment of housing loans, which in the second quarter posted the highest quarterly growth since 2011, when the subsidized housing lending program was in place as well. In addition, the share of NPLs was at the lowest level since April 2009. In 2 years since the adoption of the NPL resolution strategy, they dropped by close to 7 percentage points to 15.6% in June, and this is their lowest share since April 2009. Economic developments since the start of the year were considerably hampered by adverse weather effects that reflected above all on energy and agriculture, while domestic and external demand continued to have a positive effect. According to estimates of the Statistical Office of the Republic of Serbia, GDP growth in the second quarter measured 1.3% year-on-year. In the second quarter, the mining and energy sectors started to recover. The positive trends in manufacturing and service sectors continued as well. At year level, GDP growth should be driven by industry and service sectors on the production side. Construction is also expected to contribute positively, while agriculture will be a drag. On the expenditure side, we expect growth to be driven by investment and exports, with a rising contribution of household consumption. GDP growth in 2018 should accelerate owing to the further recovery of household consumption and a continued rise in investment and exports on the back of growing external demand and improvement of the business environment. A more favorable outlook for euro area growth will act as a fillip to economic activity in Serbia and the surrounding countries, but risks to the projection for this year are asymmetric downward, primarily due to the impact of adverse weather on agriculture and energy. Given that the downward risks to the projection this year are driven by supply-side shocks, whose effects on economic activity will be offset once the conditions normalize, risks are asymmetric upward for the next year on the same grounds. Consumer prices picked up by 0.5% in the second quarter, less than expected in May. Inflation was driven by higher import prices of fruit and fresh meat and the prices of travel packages, while a factor working in the opposite direction was the decline in the prices of vegetables and firewood due to the waning of the effects of cold weather from the start of the year. The decline in year-on-year inflation in the past months to 3.2% in July confirms the estimates from the May inflation report that the rise in prices at the start of the year was a one-off factor limited to a small number of products and services, and that inflationary pressures are still low. This is also confirmed by core inflation, which has been low and stable since the start of the year at around 2%, equaling 1.7% in July, and by inflation expectations of the financial and corporate sectors, which are within the target tolerance band of the NBS, both for 1 and 2 years ahead. Under the short-term projection, inflation will drop further in August as a result of the dropout from year-on-year comparison of last year's meat price increase, after which in September it will rise to a level slightly higher than at the end of the second quarter. In the medium run, as also indicated by our new central projection, year-on-year inflation will continue to move within the target tolerance band of 3 plus minus 1.5% until the end of the projection horizon, that is in the next 2 years. The high base for petroleum product prices will slow inflation down in the coming period, while in early next year, once this year's one-off price hikes of some products and services drop out of its calculation, inflation will decline below the current level. A gradual rise in global primary agricultural commodity prices and aggregate demand at home will work in the opposite direction. The new inflation projection is lower than stated in the May report, both for this and next year, and you can see more information on page 67 of the report. And the projection was actually revised downward on account of a smaller than expected increase in consumer prices during the second quarter and lower import prices expressed in dinars, both of primary agricultural commodities and oil. The uncertainty of the projected inflation path relates primarily to future developments in the international commodity and financial markets and their effect on the prices of petroleum products and food at home, as well as to the impact of agro-meteorological conditions on the success of this year's agricultural season. To a degree, the uncertainty also relates to administered price growth this and next year and their adjustments. Considering the projected inflation and its factors from the previous inflation report, the NBS Executive Board has kept the key policy rate on hold at 4%. And the Executive Board had in mind the projected inflation in the medium run and its key factors, as well as the new lower inflation target. Monetary policy caution in the period observed was also mandated by the uncertainty in the international financial and commodity markets, mainly in terms of the pace of normalization of the Fed's monetary policy and the movement of prices of primary commodities, that is oil and primary sundry agricultural commodities. In the coming period, the NBS Executive Board will continue to closely monitor and assess developments in the domestic and international markets and use all available instruments to keep inflation low and stable in the medium term. Esteemed members of the press, dear colleagues, at the very end, I would like you to pay attention to the fact that the August inflation report contains two text boxes. In the first, we reflected on the past 5 years of the work of the NBS, headed by Governor Madam Jorgovanka Tabakovic, and the results that we have accomplished, and these results are measured by achieved and preserved price and financial stability. We would like to thank you for your attention, and we remain at your disposal for your questions.
Dijana Stanković, Prva televizija.
Dijana Stanković, Prva television. A question for the governor. Dinar is at the record level against the euro. What is the cause of this, and how long do you expect this to last? I should better leave this, the reply to Nikola Dragašević, General Manager of the Monetary Operations Department. I can only say that we have what we call trouble in paradise. We intervene so as to prepare for turbulence, but before Nikola gives you specific details, I would like to say that here we have an interesting explanation as to why we have this historically low dinar against the euro. You know, you always have those who wish to confirm their theories by reading books which elaborate on these very same theories. Everyone wants to say that it is they who know the reason to something, and they do not use data provided by the NBS on its website as to the real reasons that led to this. So if we are to talk about this, to discuss this seriously, we must bear in mind the facts, figures, and look around us for a little bit and realize that the circumstances have changed under the influence of a weak or strong dinar and its impact on exporters, importers, the situation in the state, and so on. And if possible, we should avoid those the interests, personal interests we all have when we want to explain to citizens why this is as it is. So by taking into account, by being no more, no less than objective, we should give you a reply to this. I would like to thank the government for the introduction. The official exchange rate today is 119 dinars, 0.4667 to euro, and it's the highest level since November 2014. Since January, dinar has grown by 3.4%, and since 2017, in the beginning of the year, we had depreciation pressures, mostly on account of turbulences in the international financial market and seasonally increased demand for foreign currency on behalf of domestic energy importers. Since April, we have appreciation pressures, which led to the dinar gaining against the euro until today by 3.8%. In this period, the NBS was active on the FX purchase side in order to ease the excessive daily volatility of the dinar. And since April to date, it purchased 815 million euro. The reasons for these are the considerably improved macroeconomic situations in the country, higher FDI inflow, better trade situation with cross-border trade situation, which means we have higher exports and lower imports. This has led to better balance between the supply and demand of FX, of foreign currencies, and increased interest of non-resident portfolio investment to invest in dinar securities. We had seasonally higher purchase of effective foreign currencies in terms of exchange deals and increased bank activity in terms of increasing their net assets. To substantiate all these arguments with solid data, resident demand or net sale of FX to residents in Q2 relative to Q1 fell by around 15%, to non-residents by around 60%, which confirms the better balance between the supply and demand of FX. On the other hand, net purchase of FX rose by around 40% relative to the first quarter, caused partly by the use of dinars on behalf of foreign tourists passing through Serbia and remaining here during the tourist season. And their visits rose by almost a third, or 33% in the second quarter, equaling on average around 50 million euros per month. The governor has already said, told you that the news of JP Morgan's inclusion of our securities in their quotations, which is an important piece of news for all in terms of portfolio investments. We can safely say that investors in May and July had a considerable participation in 7-year benchmark bonds, and the significant data is also that in July, in the secondary market, they were for the first time net buyers of securities, which confirms their confidence in the prospects of our economy. This is what I would like to stress. If you have any more questions, I would be pleased to answer them.
Do you have any estimates concerning prices until the end of the year? We had droughts, we also had some storms and so on, and hail. So all this will affect the prices in retail sellers. So can you elaborate on this a bit more, please? So basically, we can talk about two segments of a possible impact of the drought on prices. One factor concerns primarily primary agricultural commodities such as corn and soy, which were hit by the current developments. That is the unfavorable weather conditions, followed by the drought, high temperatures, fluctuations in temperature, and so on. Of course, we have to bear in mind here the fact that we can definitely expect this year lower supply of domestic products in the market, which could affect the domestic market only to the extent to which it may diminish the possibility of our exports, because in these fields we have constant production surpluses which we channel to exports. It is also possible that these markets will stabilize through needed imports of some industrial plants. So what is the most important thing is that in this segment prices are dominantly determined by developments in the international markets. We may have only short-term deviations in shorter time intervals for some crops when it comes to the movement in their prices and their potential impact through the costs over to processed food, for example, the production of meat, milk, and so on. The second segment is affected to a lesser degree by the effects of drought. I'm referring to fruits and vegetables. When it comes to fruits, the impact is minimum given the quality of the fruits and the supply of fruit cultures in the green markets, which we can see now. When it comes to vegetables, we have a limited impact, and the possibility that adverse weather conditions can negatively affect the domestic supply of products is significantly limited. So in this segment, we do not expect any more significant volatility or change in the supply, which can impact prices in these markets. For example, in conditions when we had the summer frosts influenced some crops, and this influence will be absent this time. We have two segments. One segment is under the influence of world developments, and in the second segment, the impact of the drought will be minimum, but we may have some short-term effects, meaning that in the coming period, we may expect relative stability of these prices. When it comes to the effects on GDP, we wouldn't like to estimate them. We are aware of the risks, but those responsible for this area should make assessments. We will not now talk about the calculations of the impact of the drought on GDP. When it comes to GDP, do you stick to the projection of 3% for this year? And if this is the case, to what degree GDP should grow in the
third and fourth quarter? Let's elaborate on this. We're usually good on estimates. I would like to pass it to Anna to make an introduction to this. I hope you all have the report, and on page 5 of the overview, and then in the GDP projection on page 64, you can see our projections. So we remain at 3 and 3.5. As said in the introduction, we see asymmetric risks for this year. For the next year, we see asymmetric risks downward. But as Madam Governor said, currently, it is too soon to give any specific forecasts and projections. We leave it to the relevant institutions, and we remain with our projection of 3 and 3.5%, as I said, on pages 5 and 64. And now Milan Trajković will continue.
Basically, I don't have much to add to this. So we kept the projection for this year at 3%, but we clearly expressed the downside risks for this year as well. So what is important here is that we have the effects of the drought. We also have the effects of the energy sector. The most important thing is that these are supply-side shocks. Namely, this is a temporary slowdown in GDP in place, and if we have normalization, and normalization is already in place in the energy sector, this means upside risks when it comes to the projection of 3.5% for 2018. So you're right. You said that GDP should accelerate significantly in the second half of the year. That is from 4.5% to 5% until the end of this year, so as to achieve the projection for this year. Our central projection for this year is 3%. But we clearly emphasize the downward risks for this year. For the next year, the case is opposite for the same reason. Milan, would you like to add something about the stable trend of manufacturing growth, catering sectors?
So, as I already said, if we have deceleration in GDP growth this year, so I'm referring to supply-side shocks. So what is important is that 90% of our economy are still performing well. I'm referring to manufacturing primarily, since the first half of the year it's been rising at 6%, and in addition to this, this growth is broad-based. So 80% of branches are rising. Exports are rising at a rate of 12%. In the first half of the year, exports increased by 1 billion euros, and we have 21 to 22 branches of manufacturing rising out of 24 branches. When it comes to investment indicators, they're really excellent. FDIs have risen by 12%, imports of equipment have risen by 7%, and the production of domestic equipment has risen by around 40%.
When it comes to consumption indicators, we have stable growth, so the labor market is doing well. We have growth in formal employment in the private sector, wage growth as well, nominal and real, led primarily by the wage growth in the private sector. So the fundamentals are good. We have a problem. We have two shocks on the supply side. We have downside risks for this year and upside risks for the next year.
Do you need any more explanations? Okay, here we go. Steel exports, 160 million euros. Rubber and plastic products, 105 million euros. Non-ferrous metals, 80 million euros. Various machines and equipment of around 200 million in total. An important contribution to growth in exports, as every year we anticipate from agriculture, regardless of the drought. We have increased demand from our neighboring countries, who are our traditional trade partners, and this works in our favor. What's of exceptional importance for me and many in Serbia is that in the first half we had increased exports of almost 300 million euros of services, primarily in the IT sector, transport and business services, and export of each of those rose by 70 to 80 million euros. And let me repeat what I already said about tourism. We have an increase of 50 million euros. So we hope that we are changing the structure of growth and its share in GDP from agriculture to this part of the services sector. Bloomberg agency for Mr. Dragašević, considering your new position, what's the policy that intervention policy that you intend to pursue in the foreign exchange market, interbank foreign exchange market? I think your question is a strategic one, and members of the executive board, with the governor at the head, are the ones who decide on this. So this is a question for them. I, for my part, can say that the MBS has shown over the past 5 years that it intervened in the IFM extremely efficiently. The governor already shared some of the data with you. If we make a comparison from 6th August in 2012, we had a net sale of 620 million euros. Since 2008 until the 6th of August 2012, we had 5.7 billion euros. So that's 9 times less FX reserves used on this account. FX reserves were used very efficiently in turbulent times. We invested in financial stability when times were peaceful. We made stocks of FX reserves, and as Madam Governor said, 33.2% relative to almost 1% in the period from 2012 until today. I think this data speaks volumes about how important results we have achieved. If I may add, Nicola already said this in the first half of his answer, so he really deserves his position. He was a part of the team that was led by our colleague Bane Zoraya, who is here, and Zoraya still has a very responsible function in the Monetary Operations Department, but things change, this is life, but Nicola is not somebody who is new in the team. He's been working at the NBS, and he helps a lot in maintaining the stability that we've been talking about, but I would like to broaden your question to the manner of pursuing monetary policy of our central bank. If you allow, I will be really clear. We always looked at other institutions and learned from their experiences, but we also never copied them. We never wanted to be theoretically perfect in emulating other people's and other institutions' solutions that are not appropriate for Serbia. We will continue to pursue a monetary policy that is in line with the statutory responsibility of our central bank, and the aim is a higher living standard and price and financial stability. The manner in which we've been doing this is already known to everyone over the last 5 years when it comes to all the details and instruments, and we will remain one of the most transparent central banks when it comes
to our decision-making process. So we will be accountable, we are accountable in line with the circumstances that are changing, and we will not be orthodox in terms of doing only what the books write, but we will actually adapt to real-life circumstances, and we will never jump to some solutions that are not well thought out. I have a reservation. When we talk about GDP growth, and you specified this in the inflation report, you said that the factor of the growth, the most important factor, will be investment and exports. And this should be the case as well. I agree with this, and I have written about this so many times, and we've been making some projections as well, but I would like to draw your attention to some details and data. So I will not talk about the opening of the construction sites and so on, and investments. I will talk about statistics. So several days ago, Statistical Office issued information about construction works for the first half of the year, and these construction works have fallen by 5% in real terms. I would now like to add something to this when it comes to investment in the first quarter in terms of the overall GDP. So year-on-year investment in the first quarter rose by only 1.3%. And the drop in construction works in whole Serbia is evident, apart from Belgrade, where we have seen an increase. I'm not able to estimate correctly whether this is due to this transportation chaos in the city or this is due to some other factors, but this is the situation that we are facing. So we now need to recover economic growth. We don't need now such investment for the beauty of life. We need investment that will yield effects and have effects on economic growth. And I would just like to ask you, so by the end of this month or by the beginning of September, the Statistical Office will issue data for the first half when it comes to investment in the structure of GDP use, and we will see what improvements we need. But I would like to emphasize the following when it comes to the movements in investment. I'm not talking about their announcements and so on. I'm talking about the movements in investment, and I would like to warn that we had many problems when it comes to infrastructural investments with the tenders, with the companies that were winning the tenders and did not complete the work and so on. We will not go into detail, but I suggest that you should be a bit more cautious when it comes to investment. We will write about this in our MET magazine, and we will give some suggestions as well, but I just had to point out this because the situation is not so nice. So I'm not surprised by your comment. This is not really pleasant when you have to walk around the city and when you have to enter the city and the entrance to the garage is closed because of these construction works. But if you have to change and improve something, you have to reorganize the life. I will not dub this the beauty of life. This is only about the need to have a neat city, to have a nice city and to be attractive for tourists. And as you have heard, this has been seen in 50 million of the inflow from tourists, and we have also seen a tourist growth in terms of its contribution to GDP. When it comes to construction growth, I would like to ask Milan Trajković to comment on your view.
Thank you, Mr. Stamenković, for this question. As regards data that you said, you are right. What statistically published is that we have drop in the works of, as you said, around 5% in the second quarter. And you're right that investment in the first quarter slowed down to 1.3%. You said that we are waiting for Statistica to announce data for the second quarter at the end of the month. Our estimate is that investment sped up from 1.3 to around 4%. As regards the slowdown in the Q1, that's attributable to government investment, such as capital investments, capital expenditure, which fell by 30%. With the recovery of government investments during the second quarter, we can see the overall rate of investment to go up as well. And you're right when you said that we should exercise caution here. So this is something that's our projection as well for the entire year. So around 4 to 5% growth of overall investment. So this is true. This is the point of my question. I'm not so interested about Slavia, Square Slavia. Don't get me wrong. I live in Zemun, so we have a street there which connects the main street in Zemun with the Danube. So we have works there. They have dug up everything in November last year. They've put up a large blueprint, such as we want to do, that everything's going to be lovely and completed by early May this year. Now we are in mid-August and works are nowhere near completion. When I go to the farmer's market, I have to go over the trenches to reach it. And let me tell you, 2 or 3 months passed and I didn't see a single worker there. So we want to begin these works in such a pompous manner, but we don't complete them. I'm member of the the Council of the Governor. But I do not object to what you said about the work of the MBS, of monetary policy, the exchange rate, and so on. I'm here focusing on investment because these things are painted as a bright picture here, while statistics, well, we have a delay when we receive data from statistics. Thank you. Any more questions? No? Thank you all. It's been a pleasure to share these 5 years with you. I wish you all the best.